gold is being bought by people who have lost confidence in the system. And the higher gold goes, and the more flailing around the world central banks do, the more people will be in that position where they don't like what they're seeing. They're losing trust in the big systems, and they're going to protect themselves with gold. It's possible that we reach a point in the not too distant future where an awful lot of global capital tries to get through that small door. There's probably 100 times as much investable global capital in the world as there is gold at current prices to satisfy that demand. So let 1% more of global capital flow into precious metals. People will be talking about it's not gold anymore, it's unobtainium. You just won't be able to buy it if you decide you want it at that late date, and you'll be wishing that you'd bought some now.
The World Gold Council's Q1 2024 Gold Demand Trends Report reveals that total global gold demand was up 3%, including the over-the-counter year-on-year to 1,238 tons, marking the strongest first quarter since 2016. Demand excluding OTC fell 5% to 1,102 tons in the first quarter compared to the same period in 2023. In this video, JohnRubino anticipates a continued rise in demand for precious metals as confidence in traditional financial systems declines and central banks grapple with mounting economic challenges. He warns of a potential scenario where global capital floods into gold, potentially leading to a shortage in supply and a substantial increase in its value. At the forefront of conversation, Rubino observes a surge in gold purchases led by central banks in emerging economies like China, Russia, and India. He attributes this trend to a notable erosion of confidence in the dollar-centric global financial system, compelling these central banks to acquire gold as a hedge against a potential currency crisis. Analysts at ANZ Bank recently said they expect central bank gold buying to remain hot for at least the next 6 years. According to these analysts, depleted trust in the U.S. fixed income assets and the rise of non-reserve currencies are other themes that could support central bank gold buying. Another significant point emphasized by Rubino is the growing trend in the United States, where major retailers like Costco and Walmart now sell gold and silver, making it an impulse buy for consumers. According to a Wells Fargo research note reported by the New York Times, Costco has been selling $100 million to $200 million of gold and silver per month, thanks to hot demand. In essence, Rubino believes that investing in precious metals may serve as a hedge against financial instability stemming from rising debt and inflation. Now, we present the clips of JohnRubino's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The big buyer now of gold in the world is other central banks, not the US or European central banks or the Japanese central banks, but China, Russia, India, countries that are looking at what the developed world is doing with its finances and concluding that we got a major currency crisis coming, so that in effect they've lost confidence. Like you said, they've lost confidence in the dollar-denominated global financial system, and they're buying gold as protection, and they're buying it pretty aggressively. The world's central banks were net buyers of 1,000 tons of gold in each of the past 2 years, and in a market where the mines only produce 4,000 or so tons, that's a huge new source of demand. And then in the US, something is happening that's very interesting at the big box stores. Costco and Walmart have started to sell gold and silver. And now it can be an impulse buy. You can go to Costco and while you're checking out, say, oh yeah, toss a gold bar into my basket while we're at it here. And apparently people are doing that. Costco is supposedly selling $200 million of gold per month, which is a couple of $1 billion a year. And that is a big addition in demand that didn't exist before. So it's clear that this precious metals bull market is linked to a loss of confidence in the global financial system. And to the extent that the central banks are shown to have no tools left to fix their problems. They have to choose one crisis or another, but they can't choose the path of no crisis, steady organic growth with minimal increases in financial burdens for everybody. That's foreclosed now. We can't do that. We either have to choose a deflationary crash like the 1930s or at a minimum, a currency crisis like the 1970s, but it could be a lot worse than that. So the central banks of the world who aren't in this box are watching the big developed world central banks flail around in there and realize they have no way to fix their problems. And those other central banks are buying gold aggressively. I think that gold is being bought by people who have lost confidence in the system. And the higher gold goes, and the more flailing around the world central banks do, the more people will be in that position where they don't like what they're seeing. They're losing trust in the big systems, and they're going to protect themselves with gold. It's possible that we reach a point in the not too distant future where an awful lot of global capital tries to get through that small door. There's probably 100 times as much investable global capital in the world as there is gold at current prices to satisfy that demand. So let 1% more of global capital flow into precious metals. And you've got, people will be talking about it's not gold anymore, it's unobtainium. You just won't be able to buy it if you decide you want it at that late date, and you'll be wishing that you'd bought some now or bought a lot now. So you kind of want to get out ahead of something like this. It's a fairly simple story when you just go from rising debt leads to rising inflation, leads to financial instability, leads to gold and silver going through the roof. That's really, those four sentences are basically all you really need to understand this world in a basic level. And so, I think the simplest thing for people listening to this and wondering what they should do about it would be just buy some precious metals, and then start looking at the other real assets that governments can't make more of and see what kind of capital you have relative to those assets.
Despite JohnRubino's cautionary remarks about the Federal Reserve's inclination towards easy money strategies, he also underscores a potential departure from the credit supercycle initiated in 1971, signaling darker prospects. As the U.S. government continues borrowing and spending, countries like China are moving away from U.S. debt and increasing their gold reserves. The dollar is weakening due to multiple reasons. The rise of the multipolar currency approach and calls for de-dollarization have weakened the currency's global image. Furthermore, Rubino conveys grave concerns about the present situation, especially regarding the struggles of heavily indebted. He emphasizes the risks associated with fiat currency systems, excessive borrowing, and the erosion of trust in institutions, suggesting a precarious path ahead with the possibility of escalating conflict. Let's get back to the interview.
It's really important to understand that the Fed is totally clueless. Remember 2 years ago, inflation was transitory, and then it was not quite transitory, but it's still going to go away. And then, 3 or 4% inflation is not that bad after all. And pretty soon it's going to be 3 or 4% is our new target, and that's because they're working with flawed models. They really never understood basic economics to begin with. They're just guys who got political appointments, or economists who got theoretical degrees in economics, which really don't do you any good in the real world. They're going to flail around. That's the short answer to your question. They're going to do things that in retrospect look kind of stupid, but in the moment is the best they can come up with. And it's going to be skewed towards easy money because that's the real tool that they've spent their careers finding success using in a credit supercycle. But I think it's arguable that we're leaving this credit supercycle that started in 1971 when we went off the gold standard and entering something that's a lot darker. So the Fed, think of the Fed as kind of those Mr. Market stock traders who are now in buy the dip mode. They've got the idea that they can fix things with easy money because it's always worked in the past. Decent chance it doesn't work this time. And that's where things get really interesting. When the old models are proven false, the old tools are proven ineffective, and things get very, very tumultuous. And I think that's how we'll come out of the next recession, thinking we can fix it, but finding out we can't. It's not obvious how the people who are deeply in debt right now are going to get out of debt. And it's not obvious that the elites running the country right now are going to let themselves be kicked out of power and replaced by populists who they don't think understand the world in any meaningful way. So I don't know where this leads, but I think it could easily lead in some really dark directions. And that is what you get When you adopt a fiat currency, you start borrowing incredible amounts of money, you start encouraging regular people to do the same thing, and then those people stop trusting you. This was predictable from day one back in 1971 when we got rid of the last vestiges of the gold standard. And it took a really long time to get here, but we have arrived at this really predictable place where the Fed's in a box, its tools don't work anymore. Nobody trusts the other guys who are in charge, and politics are becoming kind of warfare by another name. So we're on the verge of a civil war in a lot of aspects in the U.S. and in a lot of places in the rest of the world. And I don't have the slightest idea how this plays out exactly.
With inflation still well above the Federal Reserve's target of 2%, and wars in Ukraine and the Middle East causing worry, many experts have predicted a big year for gold in 2024. With more people investing in gold as a hedge against economic and geopolitical turmoil, gold's value has been up nearly 16%, or $314, since November. Will the trajectory toward increased gold demand persist? And what implications might this have for broader economic dynamics and investor sentiment? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.